Hey there, curious about what interest rates are doing lately? Join me for a quick chat on current trends and how they might affect your finances. Ready? Let's dive in. Today we have Lisa with Milestone Mortgage.
Hello.
We're going to be talking a little bit about interest rates. So Lisa, would you mind introducing yourself?
Sure. Hi everyone, I'm Lisa Ramsey with Milestone Mortgage Group. Happy to be here. Thank you.
Yay! Okay, let's start off with a little bit about interest rates and then we can kind of get into what everybody wants to know.
Uh-oh, okay.
All right, so how are mortgage rates determined?
Sure. So mortgage rates follow the bond market, and it's basically all around supply and demand, and like how inflation is doing, what the Fed policy is doing, and what our current housing market is doing. But primarily, interest rates are set by mortgage-backed securities, which becomes a bond on the market.
Okay, so is that kind of why mortgage rates go up and down?
Yeah, so yeah, they're closely tied, just like on the stock market, the bond market. Primarily mortgage rates follow the 10-year treasury yield. But yes, so how many investors are going to invest in bonds? Would they rather invest in a stock? That is what plays into going up or down.
Oh.
In addition, it can be your credit score. So I always say, the higher the credit score, the better your interest rate is going to be as well.
That's great to note. So we can always have people work on their credit scores.
Yes.
If they're early in the process. Awesome. And when does it make sense to lock in your rate?
Yeah, so that's like the number one question, right? Because as loan officers, we don't have a crystal ball, and so we don't know how the market's going to do. We have indicators, possibly how the market's going to do. So really, it depends on just all the other economic factors that are going to go in. Your close period might be 30 days. If we have, let's say, some inflation data coming out during that time, if we feel like it's going to be better, then perhaps we will wait. But if we see it going the other way, we will tell the borrower it's time to lock. So there's no correct answer, but we're always looking at how the economy is doing and what the Fed is doing as well.
Oh, awesome. Okay, you ready for this one?
Oh gosh, okay.
This is a question everybody is curious about. There have been some great announcements that have been made. Where do you anticipate rates to go this spring?
Yeah, so that is the number one question, because last year all the experts were wrong, right? And interest rates went into the 7s and the 8s. And right now they're about the mid 6s as we shoot this. So it all depends on how inflation data comes out. But I would say maybe high 5s for certain loans. That's what we're hoping. So
that's actually a great number, and that's still below the average for our country as a whole, isn't it?
It is. So I went back and looked, and from 1971 to current, the average interest rate has been 7.74%. So we're still in that. It's still right now a great time to buy before perhaps things get a little bit more crazy.
Oh, yes.
But I always think it's a good time to buy.
Yes, definitely. Well, we thank you for stopping by, and I appreciate all of the feedback and information that you provided us. Hopefully we can have you on again.
Yes, thank you.
Thank you.